Today I'm going to show you a tool which is incredible when it comes to getting insights into the stock market. You're going to like it if you're an ETF investor, if you're a stock picker, if you're a long-term investor, if you're a trader. It doesn't matter. The reason is that it's not a typical trading tool that gives you projections of what's going to happen in the future, but instead it actually gives you a great overview of the indexes and companies, including information about sales, net income, PE ratio, and much more. If you don't know me, I'm Rick, your favorite Italian investor and tune of Mano Ginobili. And now let's deep dive into this quite incredible tool. So the platform is called forecaster.biz. To get there quickly and also try the tool for free with a trial, you're going to find the link to the platform in the description below and in the pinned comment that you're going to find in the comment section below. So I strongly suggest you do it. It's really easy to sign up to it, and the first page looks like a search engine actually. In fact, you might recognize the similarity to Google itself with a clean design, the search bar, and they might have actually taken inspiration from Google for the design, because you also have your account and this menu here for all the different tools, just like you also have it in Google. So that makes it very easy to use. Now, the first thing you should do when you land on it is to sign up, which is extremely simple, like in any other platform. And by signing up, you get a free trial, so you don't have to pay anything to try it. Now, let me quickly move to pricing just to give you an overview. You always get all the tool features. There are no different packages, except that if you pay yearly, you get some additional masterclasses and some other gifts. But the main difference is simply that you can decide if you want to pay monthly, quarterly, yearly, or even get a lifelong membership. The longer the time frame, the less you're going to pay per month. What I personally found to be the best compromise, and that's what I personally have, is the yearly plan. Because honestly, the 270 euros or dollars is really nothing compared to what I actually get in returns from the market in 1 year. So I'd rather have a better overview of the markets and spend barely, how much is it, 22 euros per month, than to give up a tool like this. All right, if we hover here at the top menu, you see the features that this tool offers, and we're going to go through all the features in detail to show you how much this tool actually has to offer. But we're going to do it with actual stocks and indexes, because this way you get a real feeling how you're going to use it. There is a calendar function, which is quite cool, and we'll also see later in this video. COT reports, ranking, break-even. There's a really cool quantum screener. Now they added a US government tracker, which is quite interesting because you can see where politicians invest, a macro map, and also a new feature, which is the AI agent. Then you have courses, which of course they're a good thing, but let me at least be arrogant and say that you're going to find everything you need in my channel for free. And for whatever specialized help you need, I also offer private consultations. So you'll find all the links in the description below. All right, let's start now by using the search bar. Again, really simple to use, and you can find literally everything from Forex to indexes like the S&P 500 or the Nasdaq 100, up to commodities and single companies. You can, for example, look for an index like the S&P 500, and I'm going to show you later everything you can see from the overview. But now let's start from a company and let's search for Nvidia, because it's the biggest company in the stock market and it's making headlines all over the news now. And as you can see, when you open whatever index or stock, you get an overview page that shows you, first of all, the performance of the company. You can choose between 1 month, 6 months, up to the total historical performance. And what's cool is that usually, if you're a good investor and you follow my channel, you know that stock price doesn't automatically mean value. So you don't just want to see that the price goes up, you want the price to be backed by an increase in fundamentals like sales and net income. And that's exactly what you can turn on here. You can, for example, click on sales, and the graph shows you not only the price performance of Nvidia, but also the increase in sales in the same time frame. So taking, for example, the last 5 years of Nvidia, the price went from roughly 14 to about 185, with a total increase of 1,187%. And if we look at the sales, they went from 16 billion to 165 billion, which is a quite similar growth to the one of the stock price. And this goes to show that Nvidia is not just skyrocketing in a frenzy, but it's actually backed by real revenue growth. If we move to net income, it actually grew in proportion more than the stock price itself, going from 4 billions to 86 billions, with a total increase of over 2,000%. Then we have the PE ratio, or price to earnings ratio, and here you can see that at least in the last 5 years, it's slowly going down. So if you're afraid that the price is growing out of control compared to the real earnings, with this tool you can actually see that for Nvidia, it's actually not the case. Moving down, you can see the yearly performance. So for the last 20 years, you can see exactly how the stock market performed every year. The dividends, which as you can see here, are increasing over time. And now look at this. This is an incredible feature. Only this, in my opinion, is worth the price of the tool. You have here all the insider transactions, all of them, which is nothing illegal. The management of a public company can't hide their trades to the public. But it's information that we usually don't consider because it's not so easy to find. But now think about it. Who better than the management of a company knows how the company is really doing? And come on, I think this is really so cool. And obviously, look at this. Jensen, the CEO, is selling all the time. And this doesn't mean that the company is overpriced. It can also mean that he needs money for other ventures or that he wants to diversify more. I don't know, whatever other reason he might have. But it's always good to know that they are doing something, that they're selling or that they're buying more. And then you can draw your assumption and conclusion knowing what they do. Now, let's try to look for a company with a different outlook. And again, remember that if you want to try it or just check out the platform, you're going to find the links in the description below or in the pinned comment. Now, this is a company which actually I made a lot of money on, and it's PDD Holdings, which has nothing to do with P. Diddy, mind that. And in case you don't know it, it's the Chinese company behind Temu and behind Pinduoduo, a popular e-commerce platform in China. Now, this is really interesting because you can see how stock price and net income don't always move in the same trajectory. In fact, in the past 5 years, the stock price went down from a peak of around 200 per share to currently 124. But the revenue went from 60 billion to 409 billion dollars. Net income, same thing, from 7 billions to almost 100 billion. So obviously, if you look at the P ratio, you notice that right now we are at the bottom, which with a company with such a strong growing revenue and income shows a good opportunity. Of course, you need to take everything into account. Some of you might argue that with what we've heard last week about Trump and China's tariffs with 100% tariffs, and also the tariffs between Europe and China, Chinese companies might have a hard time keeping up in the Western countries. Still, tariffs can change, and if you're a good investor, you need to take advantage of moments that don't seem so favorable, because if you wait for everything to be favorable, then you're not going to get a deal anymore. So what I like about this tool is that it makes it really easy for you to find companies that went down in price for whatever reason, but have growing revenue and sales, which in the end is the perfect situation you want if you're investing in something. Cheap price, strong company. Let's also see PayPal, another company that I made a lot of money on, and I sold it at the peak in 2022. And I bought again later on. Also here you can see how stock price and revenue or net income don't always go hand in hand. Look at that. The stock price fell down like 75% in 2022, and so did the earnings. But the earnings jumped back up in 2024, and they're now at the highest historical level. But the price is still rock bottom. And the difference is even more clear if we compare the price to the sales, to the revenue. From 2021, the revenue went from $21 billion to $32 billion, an increase of 50%, while the price crashed and never really recovered. So this is actually an extremely valuable tool because you can recognize opportunities and see how in the stock market, prices often deviate from the real value of the companies. So as an investor, there is no more powerful skill than recognizing when a company is selling under their intrinsic value. And that's exactly what you do with this tool. And since I'm more of an ETF investor than a stock picker, obviously, for me, it's even more important knowing how the big indexes are performing and what their fundamentals are. For example, the S&P 500 or the Nasdaq. So here we have the S&P 500 index, and as you can see, also for an index, I can look at the sales in the past 5 years or even in the past 20, and it's quite clear that when it comes to ETFs or indexes, you can see a much stronger correlation between revenue and price growth, as well as between net earnings and price growth. So for example, for the S&P 500, in the past 20 years, the price grew by 453%, going from around 1,200 to 6,700, while the net income went from 520 billion to 2.1 trillion dollars, so around 400% growth. The P ratio is, above all by indexes and ETFs, extremely important, because while by single companies, you should always consider the sector you're in or the type of business or the competition, with an index like the S&P 500, you can right away deduce if the index index is overvalued or not. And obviously, if we look at the long-term P/E ratio of the S&P 500, say for the last 20 years, you can see that it went up from 18 to 27, which is an increase of 50%. Now, for each index or stock, you don't only have an overview, but you have many more tabs. So let's see them one by one. You have the seasonality, which allows you to see how the index performed during the months by looking at the different years to see if there are particular parts of the year in which the price tends to drop, or maybe just to detect some weird price behavior compared to the usual seasonal price behavior. Then you have the projection, which is not my favorite part because here we enter the realm of traders that try to predict the future. But anyway, from here you can also see if investors are bullish or bearish. And then you have the Overbought, Oversold tab, which is quite cool because there is indeed a direct correlation between an index or company being overbought and the price being too high. And that's because when the price grows a lot, then people tend to have the so-called FOMO, fear of missing out, and start buying the thing without even thinking because they don't want to miss the wave. So when a company is overbought, despite the fact that the company might be promising, the price will tendentially be too high, and by investing, you're likely to buy into something that in the future will either have a crash or a strong correction. On the other hand, when something is oversold, people start panic selling. So the assets, moved by inertia of people selling, usually gets to a price point that is lower than its intrinsic value. Now, whenever you find something that is oversold, it doesn't automatically mean that you should buy it. In fact, you should always check if there is something about the business that at the moment is compromising the future growth. Because if you buy cheap, but the price keeps going down forever, you didn't really buy cheap. Make sense? And then we have the COT reports or COT reports, which I'll explain later, and the ranking, which is going to give you a lot of interesting information about the index or the company. In the case of the S&P 500, you can see that the price is currently undervalued. You see the distribution in the sectors, and you can see all the components listed either per value, ratio, or price change. And the cool thing is that the platform is really, really easy to use. So you don't actually need to learn anything because everything is explained wherever you see this information symbol over here, and you always have function to make your job easy, like here this best to worst that simply sorts the companies for you based on the parameters. Now, before going into details on the various functions, I want you to stay on the S&P 500 and shows you that you also have a forecaster AI agent. You can simply click on the button here, and for example here you have what's happening and country analysis. If you click on country analysis, you see for example what's currently going on with the US, so largest global economy with nominal GDP of approximately $29 trillion in 2024, service-driven finance, technology, healthcare, and consumer services dominate, robust capital markets, and reserve currency status underpin global financial influence. You scroll down and you see the sectors and how much they weigh in the index, then indicators like GDP growth, inflation, interest rates, strength, and weaknesses. If you click instead on what's happening, you get news about the S&P 500 like positive developments, market outlook, or economic concerns. All right, let's move to seasonality now. But you know what? Instead of doing it with the S&P 500, let's take now the Nasdaq index, the Nasdaq 100 index, which is the index of QQQ ETF, for example. Now, when we move to seasonality, what this graph does is it shows you how the price developed on average in different time frames. And if you look at the correlation here, it tells you how much the current price development during this year correlates to the price of other time frames, like 14% correlation with the last 5 years and 68% correlation with the past 20. So if you go here and click on current, you see the current price development, and you can actually see how the price is behaving differently than the typical seasonality. For example, around October, the price tends to go down, and up to a week ago this year, it actually wasn't happening. Now, it happened because of Trump's tariffs on China, but imagine if that didn't happen. You could have noticed this difference from the other years, and you could have drawn your conclusion. Usually, when you see a difference from 1 year to the typical seasonality, it can be either a coincidence, or it can be that the earnings of the third quarter this year have been particularly positive, or it can also be that we are pushing the price out of optimism and maybe the drop is due in the next months. Okay, now let's move to the Overbought, Oversold tab, because here you can see that also the Nasdaq index is considering neutral price when it comes to the market mood. And again, the market mood tells you nothing about the productivity of the companies, tells you nothing about the future. It's a trading tool, but what it does tell you, even if you're a long-term ETF investor like me, is if the market is right now at a stage in which people are starting to fear a market crash, or on the other hand, if everybody's selling and therefore you know that soon it's going to be a great time to buy. And I don't know about you, but myself, even though I'm an ETF investor, I have around 20% of my portfolio in single stocks. So when it comes to companies, this tool becomes even more important. Now let's move down here and you can see the market mood meter for the past 12 months. And this is a great indicator because it measures the market sentiment going from fear of missing out, FOMO, to panic selling. It's quite similar to the green index, and what you can see here is that in March, right after Trump's first announcement on tariffs, people started panic selling and the graph actually went down under the -100 line, which basically means people are panic selling, investors are pessimistic, so the market is probably near a bottom and is destined to go up again. And in fact, that's exactly what happened. What I actually do is I reduce my DCA on the market when the market mood goes to plus 100%. So it's way too optimistic. And I go heavy on my investments when it goes down to -100 or below. Mind that I never really stop investing. What I always say to everybody is to keep DCAing into the markets. I mean, if you have the discipline to invest even more when the market is going down, then you're mathematically going to achieve a better return. Now, another cool tool that I want to show you is the break-even, which basically shows you when a company breaks even with the profits. So there is a famous graph that describes the typical market cycles and what goes on in your head through the cycle. For example, when prices are down, you're in disbelief. But then the price starts going up until you're in full euphoria, right? Then it drops, and first you think it's temporary, and then you get anxious, and slowly you get to panic and fall into depression. Now, this happens a lot with IPOs, so new companies that enter the stock market. Usually there is a lot of optimism at the beginning, to the point that most IPOs usually drop in value the months after entering the market. That's why Warren Buffett always suggests not to invest in IPOs. But another thing that many new companies have in common is that they are not profitable. Even if cash is king, a business doesn't always have to turn a profit to be a success. In fact, many companies in tech or consumer discretionary have yet to break even. One example, but it's really just one of the many examples, is Lyft, the ride-sharing app. Lyft has been publicly traded since 2019 when it got a valuation of $24 billion. But it actually wasn't profitable by then. And in fact, the price dropped quite quickly, going from around $70 a share to like $8 a share. Now, Lyft is just an example, but let's assume that Lyft is a company you believe in. Let's just assume, and if you want to buy it, you should want to jump in when the company starts to make profit, because otherwise, or right before, because otherwise you're taking in too much risk as an investor. So Lyft actually started making profits in 2024. I mean, you can see here because the report of 2025 says 23 million positive. Remember that here in Forecaster, the net income and revenue data is actually referred to the year before. So for example, if I see the income statement of Lyft from QuickFS, which is another platform that I use, you see that they broke even in 2024 with 23 million. Now getting back to Forecaster, the break-even tool is actually really cool because you can find companies that just broke even. So let's say that I choose here the American market, and you see here there are 57 companies that recently broke even, and you can also see when exactly from here. Then by clicking on the symbol here, you can open a company page and you can see all the details. Now I want to show you something that I think is one of the best tools of this platform, and this is the ranking function. So what this tool does is, you see here you have the world index, American indexes like S&P 500, Nasdaq 100, Dow Jones, Russell 2000, as well as indexes from Europe and other continents. Let's go, for example, to the S&P 500, which is my favorite index. Now here you can see the composition of the index. As I showed you before, you can also see if the index is overvalued or undervalued, which is really important because if it's undervalued, it's more likely that institutions and investors are going to keep buying it. But a really cool feature is that you can click here and you can actually focus on a single sector or choose, for example, the top 10, 30 or 50 companies. Let's choose top 10 first, and you can see that even for those, the price is undervalued. And here we can see what these top 10 companies are, including their fair value, their value generation, and so on. And like always, by clicking this symbol here, you can land on the page of the single stocks. If we go to the sector and we choose, for example, the healthcare sector, you see that the healthcare sector is at the moment extremely undervalued. And if we move to the companies and sort them out for fair value, you see, for example, that the strongest undervalued belongs to Insight Corporation. So let's take a look at it. And obviously, I want to make it clear, I'm not not telling you to invest in Inside Corporation. I'm not a financial advisor and also haven't explored this company enough to know what's going on with it. But I just want to give you an example just to show the cool features of this tool. So, Inside Corporation. Let's move, for example, to the last 10 years and let's activate the sales. Now, you see here that in the past 10 years, the price went 21% down and the revenue went from $750 million to $4.6 billion. So that's quite an interesting market behavior. If we move to the net income, same thing. It went from $6 million to $870 million. So you see where I'm going. This is definitely going to help you recognize if something is overvalued or undervalued. Again, mind that only taking 10 years doesn't give you the full picture. Maybe the price was too high in the first place. So even if you see a price drop with increasing revenue and earnings, maybe you're still above fair price. Or maybe there is something going on in the company that you can see from these graphs. All right, now let's move to the US government tracker by clicking here. And this is an interesting tool because it gives you real-time reports of stock market trades that American politicians do. Now, even politicians do stupid stuff. We know that, right? But from this, you can gain insights into the investment decisions of lawmakers so you can be able to foresee potential market trends influenced by political actions. And down here, you see a list of all trades made by politicians where you can see the person, the company he bought or sold, and also when he did. It's pretty interesting. And let's say that you are analyzing a company. Let's say it's Meta. So let me go back to the search box. Meta. So in the main bar here, you have the tab Political. You see, if you click here, you're going to see the same list of politicians buying and selling, but specifically buying and selling Meta. So this is, in my opinion, really interesting, not because you absolutely want to follow what the politicians do, but if you believe that they have any kind of influence and inside knowledge on the economy, then you might want to know what they're doing with the money. All right, the last two things I want to show you are, first of all, the COT reports and then the calendar. So let's start with the COT reports. To make it brief and simple, the COT reports are published to help the public understand market dynamics. So let's go, for example, to S&P 500 consolidated. And if you click on asset managers, institutionals, for example, you can see the net position of institutions over time. So basically, how many were long on the S&P 500. And as you can see here, around the end of 2021, investors started shorting the market more and more. And in fact, the price decreased until the end of 2022. You can also activate the leverage fund positions, which are typically from hedge funds or other money managers, and you can detect a similar change in 2022. All right, last thing now, let's say that you are exploring Meta, okay? And you go to fundamentals and you see that they're going to publish the next earnings on October the 28th. You can actually click on this calendar symbol here and the tool is going to add the date in your calendar. So when you go to your personal calendar, you're going to find a note on that date, which is also going to give you a notification. So again, this is a really powerful tool, guys. I'm an ETF investor, but honestly, I gain a lot of benefit from this tool because I can track a lot of stuff for the indexes and also because from time to time, I still invest in single companies. So if you just want to try it, the trial is totally free, so you don't risk anything. You're going to find the link of the tool in the description below and also in the pinned comment, and you can just sign up for the trial and just see if you like it. If you have any questions, just write a comment below. And apart from this, I wish you a great day. And as always, I'll see you in the next video. Ciao.